What's going on, buddy? Jeff here. Welcome back to the channel. Guys, there's a lot of things unfolding behind the scenes. So it's kind of one of those times I feel like it's back towards early 2022 where the market makers and investors are propping up certain areas of the market so you can so it looks like one thing, but in reality something different is happening. Now I've spent about a week away from the charts. It's been a nice refresh. However, I've been keeping up with the news and I want to share everything with you guys in this video. Before I get into it, there is one thing that I want to talk about, and this really comes from my real estate friends and everybody I follow in the real estate niche. I am a real estate investor. I don't have a massive portfolio. Okay, I don't own apartment buildings, that are 40, 50, 60 unit. However, I do own a bunch of smaller multifamilies. And one thing I've said really since the start of the, COVID, pandemic is the commercial real estate industry is going to suffer. I knew it was going to take some time. And the reason being is a lot of these commercial real estate, their leases are for 7 years, 10 years. Okay. Some of them even as long as 25 years. Okay. Depending on the companies, that lease these properties. However, with the banking crisis that is going on and the fact that the way commercial real estate, their investment loans work, they roll over at between every 3 to 7 years. These banks are going to say, listen, even though you've been paying your rent, okay, even though you've been paying what you owe, you're servicing your debt, I can't have this on my books anymore. I need liquidity, and therefore we're going to need to pull that loan back. This is a big issue that is happening in the commercial real estate. I've talked about it for quite some time. It's been on my mind. And like I said, over the past week, I'll say a couple weeks, everything that's going on with the banks, it's really started to surface. But let's get into the markets, guys. So first of all, we've really kind of just seen some chop. This is over, just the past 10 days. Okay, we had a spike obviously after off that 380, went all the way back up to kind of 402, and here we are just channeling. Bigger picture, there is a potential for a continued run up. One thing I will highlight to you is the tech sector is much stronger. Okay, QQQ is much stronger than the S&P. All right, now the Federal Reserve did come out with a quarter point hike. As much as you had a half of Twitter saying, listen, the Federal Reserve isn't going to hike. They're going to back off. Banks are starting to crash. In Jerome Powell's speech last Wednesday, he stated once again, okay, that he is committed to getting inflation back down to 2%. And that seems to be his number one goal. Now, okay, while he has said a lot of things over the past 2 years, it kind of seems like he's continuing to be firm on this. So we have to kind of take that with a grain of salt. We are getting close to that 5.1% target Fed fund rate. Okay, now the Federal Reserve does not meet in April. Their next meeting is May 3rd. And as you can see, it's about half and half that we're going to just stay where we are right now, which is between 4.75 and 5, or we're going to raise another quarter point hike. Okay, but like I said, considering that terminal rate was about 5.1%, I don't see anything going on past this unless we see another surge in inflation. We do have a lot of Fed speakers, a lot of activity happening this week, as well as Friday, which is the PCE, personal consumption expenditure. That is really the Federal Reserve's preferred inflation gauge. Now the consensus is 0.4%, forecast is 0.6%. It did come in a little bit hotter than expected last go around, so it'll be interesting to see exactly what happens. All right, now let's get back to the charts. A couple of things I have noticed. All right, now if you follow SPY and QQQ, you can it's not hard to tell that most of the time there's about 100-point difference between SPY and QQQ, meaning if SPY is trading at around 396, QQQ generally trades really close to around that 296. Okay, SPY 400, Q 300. We've seen this kind of move tandem, and obviously when there is tech strength, okay, QQQ will start to close that gap on that 100-point difference. And we've started to see that. SPY sitting at 396, QQQ at 308. I just showed you tech has been much stronger. All right, as you can see, you take a look at Apple, and it's very ironic where Apple kind of sits. I do have some lines here, guys. It is very close to kind of off its all-time highs. Right? We saw this massive spike happen back in, all the way back in 2022, towards around that summer before we got to that Jackson Hole period, and kind of the market kind of just came all the way crashing down back into that 350 on SPY, rounding off before it continued to move up higher. But it's trading at around $160, all-time highs at 183. You take a look at Microsoft, which is another one that is very heavily weighted inside SPY and QQQ, and it's sitting a little bit farther away from all-time highs as a percentage basis, but still very, very high. Okay. If you take a look at the sectors, and this is something that's very important to notice, and I'm going to talk about a few other charts in just a moment. If you take a look at the sectors where we sit over the last month, take a look at this column right here, the 1 month column. Every single sector except for technology and communication services, which still falls, similarly closer to the technology, okay, are red. All right, which obviously financials taking the biggest hit because of all of the the banking crisis that is happening. Silicon Valley Bank really started that, and obviously investors get stared and pulled away from financials. I do believe they will recover. It might take a little bit more time before that restoration of faith, okay, or confidence in investors kind of comes back to it. However, every other sector has been struggling over the last month. And even if you look kind of over the last 3 months, you've got the consumer discretionary, but still it's been the information technology and communication services that are leading. So where did that kind of bring things to be? Okay, right? And this is something that we saw. Sorry, guys, this is back at the algo, but this is something that we saw back in that time frame of that early or that mid 2022, where you watched the entire market. A lot of other stocks were pulling, but you just had these select few, such as Apple, Microsoft, Tesla. I mean, look at Nvidia. Look at this V-shaped recovery off that 110 low, all the way back close to $300. And Nvidia is trading at like 150 price to earnings ratio. It is absolutely insane. And while all of Twitter is posting about shorting Nvidia, this is massive strength. Okay, they have already labeled that there is a potential for an offering on the table. When that does happen, I've learned this from playing small caps for quite some time. Market makers will tend to prop up the price. They are very incentivized in order to get that offering dropped. Market makers make a lot of money anytime an offering is dropped, and Nvidia has already announced there is a potential for an offering on the table. Therefore, it is propped, and everybody wants to short this guy. And like I said, this is not a bad stab when you're getting close to this 280 to 290 range. As you can see, we sold off very hard back all the way in early 2022. However, it has not rolled over as of yet. It looked like it was going to roll over somewhere around that 230, and here we are all the way back up to 280, sitting at 265 as of right now. But you've seen just these few companies, okay, that have a lot of a relative strength that are really just kind of propping up the market. Take a look at Amazon, which is a little bit different of a story here. We've got 190, 188 all-time highs. Here we are sitting at about 98, 50% drawdown. So while all of this is like, okay, Jeff, what are you trying to say to me? What I'm seeing is that you have this small group of heavily weighted stocks that are propping up the entire market. Let's look at a little bit, a little bit different of a story. Let's look at Home Depot, which is a very quality stock, a very quality company. Obviously, it had that massive spike getting in 2021. All right, lumber prices went through the roof, home prices went through the roof. They pulled back a little bit. Okay, but this is a consumer discretionary, and it's really, really sold off. Okay, once tech started to rise, it's really, really sold off. You take a look at some of the energy sector that is sold off. You take a look at Walmart, which is kind of still balancing back and through. You take a look at the airlines is another one, massive sell-off, okay? And this is on a weekly chart. So this is going over the past month, about a month. Airlines, massive drawdown, okay? And there's a lot of other sectors that it's happening to. I'm not going to drag you around with everything, but it's very important to note when you see this sector rotation happening, you can look at this on Fidelity. You can look at this, just Google sector rotation. You can take a look at it. It's very interesting to know. You see some of these high flyers that are running, really propping up the entire market when everything else is starting to collapse. Now, when technology eventually starts to roll over, that's when the entire market is going to pull down. And what you want to focus on is the stocks, a couple of them that I just mentioned, potentially airlines, okay, so long as they're not having individual sector trouble. And also, you look at your discretionaries, okay, Home Depot being one of them, as well as some of your retails. And if they are showing signs of basings, those are the stocks that are going to rebound first. So you might be looking at SPY and QQQ that is pulling down, the market's pulling down, and you're watching this entire other sectors that are slowly grinding higher. Energy could also be one of them as well, and look for a potential financial recovery. Although I do think financials will take a little bit longer. Healthcare is obviously another one that tends to recover when tech begins to sell off. All right, so guys, that is it for this video. I'll see you in the next one.